I think what we witnessed over the past couple of weeks, Dan, is symptomatic of investors and corporate America and corporate boards trying to reprice risk of an old world order, the rules-based world order. However, right now, whatever this new world order is going to be called, the rules are changing. They're up in the air, and we are still trying to price risk based on the old ways. I think that is what we are witnessing live unfolding right now. It's not easy. Volatility is the name of the game, and I think this is going to persist and continue for a long time.
Indeed, and a really interesting hot take from the former Treasury Secretary Janet Yellen overnight on CNBC. She said investors are beginning to shun dollar-based assets, and I want your take on this as well. Do you think we're seeing a longer-term shift away from US Treasuries as the global safe haven, because they've been trading essentially like risk assets over the last week?
I don't necessarily agree with that analysis, Dan. I think we're definitely witnessing a shift of some sort in the short term, but let's not forget that safety is a relative concept, both geopolitical safety but also financial safety. So within that context, I think investors will find their footing, and I still fail to see which other jurisdictions or which other currencies or assets provide a perfect hedge, for lack of a better word, for US assets. So I think in the medium to long term, investors will come back and settle with the current realities. But in the short term, of course, we are seeing some reaction of investors trying to find the hedge against policy risk coming out of the US administration right now.
So how are you navigating this environment? Have you been adding to risk positions, buying the dip, or are you looking for safety out there right now?
Look, I think it's incredibly dynamic, and I try not to make decisions at haste when it comes to this, because there's so much news that we have to digest, so much different news flows that are coming in, including things like the AI diffusion rules that are going to be mandatory come May 15th and so on and so forth. So buying the dip is a big word. In certain assets and certain shares, sure, why not? I mean, my view is that I am very much long the Max 7 in the long term. Our future is going to be driven by AI, so why not? But it is very difficult to paint this with one broad brush to say, we're doing X, Y, Z. I think the name of the game is, and this goes for corporate boards and corporate America as well, try to stay as much as possible ahead of the news, try to price the geopolitical risk and policy risk as dynamically as possible, and look at the business models. Are your business models still viable in this world as they were in the previous world? I think that is something that I would advise all of our investors also to take a look at.
So essentially just becoming more selective in this environment.
Correct. Very much so. Very much so. And I think what we'll witness then is, and this was, by the way, the case post-pandemic anyway, but I think right now this has been expedited. We will witness a lot of corporates around the world, in the US included, try to borrow their way out of shifting business models. So you will likely to see bond markets grow, which is interesting given that the long end of the treasury yield and the curve is going up. I mean, pricing in uncertainty of whatever may come in the next 10 years or so, which I think is going to end up expediting the existing Darwinian mechanisms of free markets. We'll just see a lot of things shift and change, which is great for trading volatility if we are doing so.